Welcome to ForexTV.com. Today is Friday, April 25th. I'm Remy Hookie with your New York Forex Market Buzz. In afternoon trade as of 1:30 p.m. Eastern Time, Euro dollar is at 1.5605. Sterling dollar is trading at 1.9830, while dollar yen is at 10440. Taking a look at today's U.S. economic data, the University of Michigan's Consumer Sentiment Index for April came in at a 26-year low. The index came in at 62.6 from 69.5 in the previous month. Meanwhile, NYMEX crude oil futures soared over $3 in mid-morning trade to hit above $119 a barrel. This afternoon, I'm joined by George Davis, Chief Technical Analyst at RBC Capital Markets. Good afternoon and happy Friday to you, George.
Thanks, Remy. Same to you.
Well, as we head into the weekend, the U.S. dollar is ending on a firmer note after topping 160 against the euro earlier this week. The dollar is closer to the 156 level. So fundamentally, we had the Fed rate announcement on April 30th to focus on, and technically, the euro has not held on to record highs. So what's your outlook going forward?
Well, in terms of the outlook, I think next Wednesday's Fed decision is going to be very, very interesting for the market, just because this week I think we've had a significant reweighting of interest rate expectations. I think now a lot of people in the market are expecting potentially for the Fed to start moderating the magnitude of its rate cuts and perhaps even that we're near the tail end of the easing cycle. So we've had a significant repricing of interest rate risk in that respect this week. U.S. yields moving significantly higher, and that has generated a positive undertone for the U.S. dollar. So on Wednesday now, I think what the market is priced in is a 25 basis point rate cut by the FOMC, and what will be more relevant for people now is the accompanying statement in the sense that I think the market's going to be examining that statement to see whether or not we can expect some additional easings from the Fed, or whether or not the Fed is signaling a pause in interest rate policy. So that will be very considerable and important from a fundamental standpoint. And from a technical standpoint right now, we're seeing the U.S. dollar attempt to generate a retracement phase, given the fact that it's oversold against a lot of the major currencies. And against the euro, for example, we've got a very important support trend line that comes in at 155.82. That level is likely to be tested later this afternoon or early next week. And obviously a close below that level would favor some additional weakness down towards the 154 area. So we could see some additional gains in the dollar as we move into next week.
Okay, well, speaking of interest rates and central bank monetary policy, we've been seeing diverging price action in terms of the commodity currencies. Earlier this week, we saw Aussie dollar break above 95 on the heels of stronger than expected Australian inflation data, and also the BOC cut interest rates by 50 basis points. Meanwhile, crude is back up while gold is lower on a stronger dollar. So for the Aussie as well as the CAD, what is your strategy?
Well, in terms of the commodity currencies, a little bit of a dichotomy there in terms of what's driving the price action. In terms of the Canadian dollar, it's a very mixed picture right now. Dollar Canada basically has been trapped within a 101-102 trading range this week, and I think part of the problem is, on the one hand, we have the Bank of Canada cutting interest rates on expectation of a slowdown in economic growth going forward, as well as inflation coming in below the midpoint of the Bank of Canada's target rate at 2%. Yet, on the other hand, certain commodity markets, such as crude oil, which have a fairly high correlation with the performance of the Canadian dollar, continue to do quite well. So that offset between what's going on in the economy and what's going on in commodity markets have generated a bit of a tug-of-war for dollar Canada, and it's got a very neutral profile right now. The Aussie, on the other hand, I think has come off over the last two trading days, and I think what we're seeing here is the market react more to the price action in the dollar, as well as the price action that we've seen in gold. Gold coming under considerable selling pressure given the rebound that we've seen in the greenback, as well as some of the base metals coming under pressure. And I think the risk there is we're likely to see some additional downside follow-through in the Australian dollar, given what could potentially happen with U.S. monetary policy next week.
Okay, and let's take a quick look at the dollar yen, which remains higher in today's session. We have plenty of market moving events next week, which will weigh on risk appetite. But technically, what levels are you watching for the dollar against the Japanese yen?
In terms of dollar yen right now, it does have a topside bias given the reweighting and interest rate expectations that we've seen for the U.S. this week. Support coming in right now at 102.33, and we've just broken above the initial resistance level for dollar yen at 104.18, and a daily close above that level today would be a bullish development that would signal the potential for additional gains up towards 105.74 next week. So the bias still remains to the top side for dollar yen right now.
Okay, and last but not least, George, before we wrap it up for today's interview, let's take a quick look at the UK pound. On Wednesday, we got the BOE MPC minutes, which showed a surprising three-way split for the latest rate cut decision. So while downside is expected for the UK currency, technically for euro sterling as well as for the pound against the US currency, what's your outlook as we head into the weekend?
In terms of the technicals right now, we have seen the pound put in a fairly good performance today. But one thing that's interesting to note on the charts is the fact that over the last couple of weeks, the pound has failed to sustain moves above the 200 level. So I think there's going to be some fairly considerable resistance up there. We actually have a trend line for the pound sterling that comes in at 199.65. So I think that moves towards that area are going to attract selling interest. And on the downside, we've got support at 96.11. A daily close below that level would be an extremely bearish development for the pound sterling. Now for euro sterling as well, we've seen some short-term weakness in the cross, and I think we're likely to see a little bit more downside pressure as the euro remains under selling pressure. We've got resistance that comes in at 80.15, so the 80-cent level I think is going to attract some selling interest right now, and I think there's the risk that we see a deeper decline down towards support at 77.48.
Okay, George, thank you very much for joining us this afternoon, and thank you for your insight and analysis.
You're very welcome.
This has been your Forex Market Buzz with George Davis, Chief Technical Analyst at RBC Capital Markets. I'm Remy Hokie. Join us later this afternoon for a PM Exchange right here on ForexTV.com.